Welcome to today's episode of Heard and Seen Around. I am Rajesh Karipurath. This is my take on macroeconomic and geoeconomic data points, which I find interesting. I hope you enjoy watching it as much as I enjoyed curating it. Cheers.
My school was so tough the school newspaper had an obituary column. Norm Crosby, you're only young once, but you can be immature forever. A critic is a man who knows the way but can't drive the car. A house is just a place to keep your stuff while you go out and get more stuff. The only thing he hasn't edged today is his lawn. Classic cricket cliché.
Here's a chart that says it all. Before ChatGPT launched in late 2022, AI barely got a mention on earnings calls. Fast forward to H1 2026 and references to AI disruption have exploded to nearly 800, a record by a wide margin. This is not just hype. CEOs are now discussing AI because it's changing costs, productivity, hiring, and competition across industries. The conversation has shifted from should we use AI to what happens if we don't. In today's market, ignoring AI is starting to look like a business risk. Here's a fascinating way to value gold and silver. Instead of looking at jewelry demand or central banks, this framework compares all the gold ever mined with the global money supply. The result? Gold's theoretical value comes in around $3,828 per ounce, suggesting it's trading at roughly a 10.7% discount. For silver, using a historical gold-silver ratio of 60:1, the implied fair value ranges between $53 and $75 versus current prices which are around $58. It's an intriguing framework, but remember, markets don't trade on theory alone. Sentiment, interest rates, and central bank policy often have the final say. India's trade story is getting bigger every year. Over the last 12 months, the country exported $461 billion worth of goods while importing a record $807 billion. Yes, the trade deficit remains wide, but there's another way to read this chart. Rising imports often reflect a fast-growing economy buying more machinery, energy, and raw materials to fuel expansion. The challenge now is to keep exports growing faster through manufacturing, electronics, and value-added products. A bigger economy naturally imports more, but sustainable growth eventually needs exports to catch up. India's startup capital is stretching its lead. In H1 2026, Bangalore attracted over $2.7 billion across 165 funding deals, nearly 3 times the $970 million raised by Delhi NCR. Bombay followed with $587 million, while Hyderabad emerged as the fastest growing hub and Chennai continued building momentum in SaaS, manufacturing, and deep tech. The message is clear. Venture capital is becoming more concentrated. Bangalore remains the default destination for big ticket funding, but other cities are carving out strong niche ecosystems. India's startup story is no longer just about geography. It's about specialization. India's Fintech sector is back in fundraising mode. In H1 2026, startups raised nearly $2 billion across 106 funding routes, a 42% jump from $1.4 billion a year ago. What's striking is a concentration. Cred alone raised $900 million, followed by Credit B at $220 million and Weaver at $156 million. In fact, 80% of the funding went to late-stage companies. The mood has clearly shifted from fund everything to fund the proven players. Capital is flowing again, but investors are writing bigger checks to fewer companies. India's ethanol push has hit a major milestone. Production has exceeded consumption since 2023, and the blending rate has climbed to 19.3% in 2025, bringing the country close to its 20% target. But there's a catch. Despite higher domestic production, India still runs an ethanol import bill of around $400 million, with over 94% of the imports coming from the United States. The long-term goal is clear: reduce crude oil imports and support farmers. But for now, one import bill is being replaced by another. The next challenge is building enough domestic ethanol capacity to make the strategy itself self-reliant.